Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Monday. It is the 29th of April. It was a big day in the financial sector as that breakout really just kept running that we saw on Friday. We have earnings, more earnings, and then a little bit more earnings as the week will go on. And hey, Lloyd, good morning to you, friend. Hope you had a great weekend. A pretty busy slate. As we talked at the end of last week, you guys, everywhere you go, it's earnings season. Hey, Micah, good to see you. It's just going to be a busy week. Lots of energy companies, lots of healthcare companies. Of course, the big one tonight is Google. Hi, Patricia. Google reported after the close. Just a quick look. Didn't have a chance to really do much other than peek at it. It looked like we had a beat on EPS, but a miss on revenue, and it was down a little bit, 3-4% in the early going after that report. Now, there's still a lot of time to digest that report between today and tomorrow's close, but that is definitely the big one out there. Another half dozen or so S&P companies reporting tonight as well. Big round in the morning as well, and very nicely done then there, Tanner. Well played, sir. So we've got MasterCard, Pfizer, McDonald's, Merck, Eli Lilly, GE, ConocoPhillips, GM, Phillips 66. We've got lots of big names, and we're just getting started this week. So going to be another one of those weeks, as we kind of talked before. I think at least a good place to put yourself when you are swing trading, through earnings, is just to kind of keep in mind there can be increased day-to-day volatility depending on the names reporting that day, right? If Google has a terrible response to that report, it's probably going to bring down some of its peers. Not all of them over in the communication services. We already saw last Friday where Chevron and Exxon really let their sector down, and it's still trying to catch its footing off of it. So while we never know for sure, I think it's just a good idea to at least mentally prepare for a little bit more day-to-day volatility in the middle of earnings season. So pretty much today, we did hit an all-time high on the S&P 500. We didn't close above that resistance, but we did break it on the intraday. Here on the open, we kind of started cooking pretty quick right out of the gates. Towards the later part of the day, had a little bit of a pullback, a little bit of a profit taking that last 15 minutes of the trading day. It looks like, to me at least, on the S&P, not a huge deal, but it did put us a little bit of a, just a hair below that resistance level. I mean, we are knocking on that door. We've hit all-time highs. We've yet to close all-time highs over in the S&P 500. Beyond the kind of looming resistance zone that we are battling there, everything else to me looks really strong, above everything, showing great strength, still holding the 9 exponential moving average. So still think that, barring a disastrous week of earnings, the bulls are going to be able to maintain control of this thing as we work forward. Have a little more room over in the Dows. We've talked several times before. Not much, just a little bit of a doji day off of that Friday candle. Still a little bit of room. We have some room to operate before we are dealing with the all-time highs over there in the Dow Jones. So not a whole lot of anything new and interesting, I don't think, to see in the Dow. I do think that we can start to at least entertain the idea of this swing low that we put in last week, acting as our swing support level, that first level of support to hold us up. If we would have had a little bit stronger of a candle today, I probably would put it there, and I still probably am, but I'd like to see a little more upward movement before I say, yeah, I trust that. But I'm very close, and I would understand completely if somebody said, I'm there. I do think a little bit more upward movement can confirm that, at least for me, that hey, we should stay above this price point. If this gives out, maybe we're going to have a little bit of a deeper retracement over in the Dow. NASDAQ, I mean, it's just a broken record. Every day is a good day. Even the red candlesticks are basically all-time highs or great-looking hammer candlesticks. And hi, Marie, good to see you. And I hope you had a great weekend. Went by quick. I always look forward. So some of the other coaches do too, to the draft weekend, and it's kind of a Christmas time for football nerds, and it's just over just like that. So it went by faster than normal. But NASDAQ, I mean, it just continues to do what it does best, continuing to march up and up and up. Of course, technology has been very strong. Nothing really to say that we basically haven't said a million times, at least it feels like, before. Now, the interesting index of the day, I think we got to put it on the Russell. We worked in to that 1600 range here today. We actually briefly eclipsed it at 1603. We did sell off. We weren't able to close that 1600 mark. We, of course, all know that this is a pretty big deal, a pretty big resistance zone, old resistance, major breakout, breakdown, kiss it and drop, huge run, come to a screeching halt off of that run. 1600 or approximately 1600 is a huge deal on the rut here. As you guys know, I'm calling it 1605. I just want to make sure that it has broke, and I feel that if this does break to the upside, there is good upside potential. So waiting for a few extra ticks on the Russell is not something that concerns me. I think just for the most part, traders are looking at breaking above 16. Weren't able to do that today. We did take it out on the intraday. We're not able to hold it. And as I've said many times, and I'm not alone, the close is what matters. The close is a close is a close. So at least one more day before I can call this a breakout. But boy, it sure looks like it is trying. As Matt said in the halftime report today, the rut can move too. If we do break to the upside, it can move very, very quickly when it wants to do so. So I'm looking forward to seeing how this week impacts the Russell. We're going to get our chance to break out on the rut. Will we win or not? That is the question. We will have to see. Not a lot to see over on the VIX here today. Just another day at the office for the most part. As we get into our sectors, things get a little more interesting. I think not so much in the materials sector as it continues just to hang around as long as it's holding this old resistance zone here at 56 and a quarter, that slash the 50-day moving average. I'm still looking at this as a bullish pullback opportunity. And hey, Tiago, good to see you, buddy. Hope you're doing well. So not really anything to change that opinion. For me, at least, not some great signals, but still, I think clearly holding up on the trend, still looking at this for some bullish opportunities. Don't think today's candlestick did a lot, but if I'm thinking aggressively, we might be able to come down into that intraday time frame. We are kind of developing that intraday reversal pattern, right? Hasn't confirmed, at least by my rules, just yet, but we do have a little bit of a double bottom. Let's see if I can. Yeah, there we go. A little bit of a double bottom, and we're now creating a higher low. Have yet to, for me at least, break through that resistance. So a break above this now 3-day intraday zone could be a little bit of a spark for the bulls. That would also take us above that 9 exponential moving average, which the only real concern I have right now within this sector is I don't love when things are below the 9, especially when that 9 is falling down. That has acted as a resistance catalyst so many times in my experience. So I'd like to see it get back above there. But if we do take out that resistance, we are closing, taking out that 9 exponential moving average as well. I could see more aggressive traders looking at that as the opportunity from the pullback perspective. So still really like this for me, at least one more day before I'm quite there. And basically probably one more week on energy. So after, our earnings misses on Chevron, on Exxon, gapping us down on Friday, not a lot of movement here today. Certainly not a great looking candlestick, but really, I don't think it's told us much different than what we had to work with here on Friday. Obviously, I don't love that we're on the wrong end of that 50-day moving average. I think the proper approach that for me, at least this week, is to work through these earnings. We've got lots of energy earnings coming out this week. I want to let it shake out. I don't think our bearish signal occurs until we take out this 65 marker. If we do, though, and I still expect us not to, if I had to choose, if we do, I'll call that a bearish signal. I don't know that that's the day to be trading necessarily, but I think I will call it a bearish signal in that scenario. You know, we've made our left shoulder, made our head, broken down and created a little bit of a right shoulder blade through here. Of course, we've got a lot of history and a lot of space, right? If this support zone does give out, there isn't a lot to catch us. I mean, we have a 1 day, you know, here, but not a whole lot into the 62 range. Now, I expect it to fight. I expect these earnings will have an impact one way or another. Right now, I'm putting it right back into the neutral category, leaning just a little bit to the bullish side still, but a lot more neutral after those earnings and the follow through here today. You know, when we saw those earnings impact the industrial sector, buyers came right back in, right? We saw that the very next day, and that was not the case here in energy. And that just, yeah, I think there's going to be more attractive areas. I'm starting to believe that the right approach is wait until it gets above that 200 daily and that 200 weekly before you get too terribly excited. It's been choppy. I still don't think it's given us a signal to say no, give up yet, though. But it's a little more than I'd like. You know, gap to the downside, below our moving averages, closing below the 50 now 2 days in a row. It's hard for me to paint that in a bullish light. And hey, Scott, hey, Anita, good to see you guys. I hope you had a great weekend. So we'll see where this one goes. For me, caution is the really the game plan when it comes to energy this week as we work through those earnings, though. Over on financials, big winner on the day, very strong follow through off of Friday's breakout candlestick. Did come off of the intraday highs, much like the market, kind of saw a little bit of selling towards the end of the day, but it really does look a lot like the market where it just kind of drifted down the last hour and a half, 2 hours off of very strong movement. Have to really like this sector right now as far as being a bull is concerned. We do have a little bit of stuff overhead, not a lot of major areas in my mind, at least, until we work into this 2850 range. Not a lot of real major support or old resistance, but there's going to be a lot of little stuff that, you know, could spark profit taking. But I have a hard time not wanting to be very bullish within this space. Things are looking really good for the most part. You know, you had Bank of America, and I know you guys, you know, many of you probably had it on your watch list from last week's stock report. I waited all week long for it to break out. Took until Friday, but it broke and ran. You had Citigroup. I'm not sure if they're in there, but let's just throw them in there. We looked at that little pullback last week, very strong movement pretty much across the board. You know, the big banks are pulling their weight. The insurance companies tend to be pulling their weight. So it just continues to look like a very bullish area for me going into the for the short term. Certainly be looking for bullish opportunities throughout the course of this week. There is no doubt about that. Very strong follow through. Maybe we need a consolidation for 1-2 days or whatever, and that's fine, but still think that this is probably the cleanest area to be in right now, at least one of them, right? Hard to make too much of a case against tech and discretionary and maybe even industrials, showing some nice movement off of that Friday bounce off of that support zone as well. Still like it. Again, much like, you know, the Dow Jones, I'm right there on the fence about calling this low that we shouldn't go below here. Now that's our 77 being tested. I know it didn't hit it to the penny, of course. We've seen that upward movement. Any more upward movement, I will say that this would be that first truly bearish signal if we were to break that. Now, that is not what my expectations are. I continue to really like the industrial sector and continue to expect it to try to work its way into that $80 mark. A little less happy with it than I was before some of the earnings came in. I don't think they were terrible per se. Well, a couple of them weren't so hot, but you know, it certainly weren't the strongest. They didn't have the response that the financial sector has had to its earnings. But really, as long as we're above this zone, I think you still have to be looking at this sector overall bullish. Not a lot has changed for me from that perspective. little bit of a kind of a breather type of a day on tech. We had that nice hammer off of that 9 exponential moving average on Friday. Saw some upward movement early, but ultimately closed pretty flat. I don't really think there's much to see here. Still very strong, new highs. I mean, it was just a few days ago, we hit a new all-time high. Friday, a nice candle. So we're still seeing buyers come into this area. But again, lots of earnings. And that's the one thing I'm going to be keeping in mind, probably more than anything as this week progresses, is how do these earnings that are coming in batches now in these different areas, does that mess up the chart? It kind of messed up the energy chart, I think. I don't think it completely destroyed it, but it messed it up. And that certainly can happen. And Google might be causing some trouble for the communication services if it doesn't kind of bounce back in after hours trading. And hey, Marcelo, good to see you. So just another great day, a great looking chart, at least over in tech. Not a great day, but we'll take when this is a bad day, a doji doing nothing, when we're so spoiled that that's what it takes, I think we're doing all right for ourselves. Over in staples, just knocking on that door of that resistance level. I want to come into a weekly chart here really quick. I know we've looked at this before. I'm going to steal you because, well, you guys don't deserve to be subjected to my drawing on a Monday. So we'll just steal that line right there. We're knocking on the door. Still don't think you can call it a break. Much like the rut, I think it's really, really trying. And quite honestly, I expect it to be able to win this battle, but hasn't happened yet. And so while I can have my expectations, resistance is resistance until it's not, right? So we are knocking on that door, though, no doubt about that. Again, much like the the industrials, the Dow Jones, starting to be thinking, yeah, you know what, we shouldn't go below here. If this gives out, then maybe this is a little bit of a double top, confirmed by the break of this support level. Not a lot until the 50-day moving average. So maybe I think I just talked myself into it. The upward movement at resistance. I think we can call this our support level that we should not go below. I wouldn't mind seeing a little more room or a little more movement with where we are in this space. I mean, if Friday's candle was 2 candles, I'd have no problem doing it. So I guess it doesn't make too much sense to not do that. So for me, great. See, this is why I love to do this with you guys. Makes me talk out loud a little bit and gets me thinking. Sometimes for the better, hopefully. So, but I do think we can actually call this support our swing support level. If this does give out, and I do not expect it to, but if it does, might be a little bit of a cause for concern over in the staples. Utilities, not a lot to see here. We are sideways. I have a hard time getting behind anything else until we've basically come out of what's turned into the 57. We all know that. We had some nice movement off of that last week, but we're stuck in this longer, I guess, than last week range here in the utility sector. So for anything directional right now, I continue to shy away from the utilities. And from a bullish point of view, as long as we're above 57, I can understand folks buying. I just don't think it's a great environment for swing trading right now. 57 is a big deal, though. We've now got some confirmation to boot. So we should stay above this. If we do give out, that could prompt some more selling, and certainly with the type of market that we're in, that might be something we have to watch for, in the weeks to come. But right now, we're just right in the middle of the range. And if you can figure out something with that, my hat's off to you. I can't. So over in healthcare, looking really, really good from a bearish retracement perspective here, working right back into those old highs. We've been watching the weekly chart because I just think it's a little clearer. We've got that old support zone. We have all of these short-term, all of these weekly moving averages sitting on top of it. This is a very interesting place for the bears, in my opinion. The only real drawback is there are lots of earnings coming out within this space this week. But I think you have to really like this resistance zone. Definitely think we should watch it. I think this is a very important price point that we're working. If we can continue this little bit of snapback rally that we've had, past this, well, maybe we need to be a little more open to the healthcare sector. As long as we're below that, though, for me, not very interested whatsoever. Very interesting. There are a few. You have ISRG, probably the most interesting one. It already had earnings, filled up its earnings gap, and really sold off pretty heavily here today. But a lot of them are still coming out. We saw Merck, we saw Lilly coming out tomorrow before the open. So we're going to have to get through some earnings. But I think you really have to, if you're looking from a bearish point of view, I think you have to really start to be interested in this chart within the sector right now. Now we're running into some challenges, technically speaking. We'll see how those earnings. Directionally, I'm already tired of swing trading or earnings season as a directional trader. I enjoyed it, but now I'm tired of it. So, but it is not tired of me. So I will have to learn to get by. Over in discretionary, not a lot to see here. A little bit more selling. Weren't able to hold off of those, off of the upward move early in the day, but still closing above everything. Still very strong. Still hitting highs on a pretty regular basis. What do you say other than much like with the NASDAQ, you just roll with the trend. As long as it wants to keep doing that, I think we will just keep doing it with it. Over in real estate, some downward movement today. Not, I drew this little trend line here. I don't think it's quite time to do that, but I wanted just to throw it on here, talk about it for just a second. If this, if we do end up creating this lower high here and continue to see some downward movement, of course, we've talked about this support zone or this breakout zone on several occasions, and there's room, and it might very well just be kind of going neutral like the utility sector is right now. But if we do get pushed down here, that might be something to keep an eye on. Either we work down and test this old breakout point again and fail it. That'd be a pretty ugly sell signal in that scenario. We pull back a little bit, create a higher low, and then start to work back up and take out this resistance, probably a pretty clear path back to those highs in that scenario. And maybe we're just going to utilities it and we're just going to dance back and forth. And that's kind of where my head is right now, looking at it very neutral. We'll see where this one goes right now. Again, for me, much like utilities, when there are things out there that are offering better risk to reward, a little more clarity, whether it's super strong trends like the technology, like discretionary, or breakouts like the financial, tested breakouts like industrials, pullbacks like the materials, you just are going to have a hard time getting me too excited about this chart in that type of an environment. And lastly, over in communication services, good solid day. Google hit an all-time high. That did not at first glance look like how it was going to be. A lot of selling, as you can kind of see here, working all the way up almost 13 here today, but really a lot of selling after hours. Looks like we're down over 5%. Again, it looked like an earnings per share beat, but a revenue miss. And at least the first wave of traders are not happy with that. As you guys all know, Facebook, Google can have a tremendous impact on this ETF. Facebook's looking really good. We'll come back to them in a second. So keep an eye on where that Google opens on the tomorrow, see how it impacts it. Hard to say for sure what this chart's going to look like if Google is going to see a substantial gap down on the open tomorrow. Again, we still have some time between here and there. So, how many times have we seen traders change their mind off of the initial report after, they hear the CEO talk or something. So we'll see this one in the morning, have a lot better idea, I think. But Facebook, really strong move here today. Of course, Twitter, we had them on, I don't know, stock, I think they might have been options report. They're one of the reports, really nice movement. You've got some of the gaming companies like Activision, Blizzard coming out this week. So lots of things going on earnings-wise within this space as well. But a pretty solid day here today. Now let's get into these earnings and see how this sector is able to hold up. So for the most part, not a lot changed today, but really good follow through over in financials. A little bit of a pullback. Keep in mind those present really good opportunities, right? A lot of times we think, well, it broke and we missed out, but then we see a pullback and we think, well, we shouldn't trade the pullback for whatever reason because we're people and we can do weird things. That's one of the endearing things about us, right? So, I'm going to be continuing to look for buying opportunities within the financial sector this week for sure, even though many of them very strong movement here today, whether that's intraday, consolidation, pullbacks. We'll have to see what it offers us, but I still think it's going to give us opportunities as the week progresses. As we move over into our commodities, over on the dollar index, not a whole lot here to see. We're still kind of pulling back, drifting towards what appears to be the inevitable test of this breakout point. It seems like that is just where this wants to go to me. We're going to pull back and test this as support, see what kind of candle we get. Do we get a doji at 97.75? Well, that might be an interesting development. Do we stop when we get there? Do we fall right through it? Still really like the dollar from an overall bullish perspective. I do, like I've talked many times, I think this was a very good bullish signal going into the next several months in the dollar. Right now, still waiting for that pullback opportunity to see when we get that first opportunity to get in as a bull. Not the guy that was going to buy it the first day. Whether or not, in hindsight, maybe I should have, but that's just not who I am. Over in metals, after bouncing back nicely on Friday, working right into those short-term moving averages, more selling here today. Still don't think there's a great trade being set up in gold, in the metals in general, but in particular on gold right now. Still on a wait and see type of approach. Not a lot. Did this break? I guess that's probably going to come down to your definition and the rules. It didn't hold the break. You look at it on a weekly time frame, and it didn't break down. You look at it on a daily time frame, and it did. And depending on how you're looking at it, I could see why someone's looking at this as a bearish retracement. If they're looking at, hey, we did break below that support zone, we closed several candlesticks below that, this is just a bearish retracement, I can understand where that camp is coming from. I'm not there. I still think right now just leaving it alone and letting it play out a little bit longer is the right approach. Maybe I'm right to feel that way, maybe I'm wrong, but that is the way that I feel personally. But if I were a bear, this placement makes sense. Right between these shorter term moving averages. I just don't see it, at least today. A little more downward movement, maybe you could convince me, but quite honestly, I don't believe that. I would just be more open to it. 1280, I don't know if we even want to be too terribly worried about this number right now. I know this zone we should be keeping an eye on, but I don't know if we need to really call it 1280 any more than we just need to call it the 1280 zone. So this is really probably going to come down to you. What are your views? What would be interesting if we see some downward movement is how traders respond to it. There still will be opportunities. If and when we get that clear break, there is room in my mind to the downside into 1255 or 1260. So I'm willing to wait until that signal develops, and at least waiting for one more day. Over on silver, same type of a deal. After briefly sticking our head above that little trend line here, no follow through. Didn't even take a run at that resistance zone from Friday. And of course, much like gold, really sold off here today. I'm a lot more comfortable if I were going to go into a bearish trade. I'd need a little more downward movement, taking out at least today's low. But I think this would be an easier sell to me for a bearish entry if I get a little bit more downward movement than gold. I think it's a little less choppy of a chart. Now, realistically speaking, I think probably a better signal, I'm going to have to do it live. There we go. Hey, not so bad. A better signal is going, yeah, there we go. Is going to be a break of this little floor. If that is taken out, I think that is going to be pretty interesting little trading signal to the downside. But I could understand folks a lot more. I understand the retracement argument a lot more on silver personally than gold with where it is. A lot of selling, no matter where you find yourself, a lot of selling over in the metals here today. There's no doubt. Over in natural gas, another start, after Friday's, bounce, really, this has been, again, a tough one, depending on what time frame you're looking at, weekly, more daily. Hey, bearish retracement opportunity maybe in the next couple of days. Till, I look at that weekly, and as we kind of talked last week, until I'm sold that, yeah, we broke that support zone, I'm not sold that, yeah, we broke that support zone. I still, quite honestly, and I know I differ than the other coaches here, but if I had to do something, I'd still bet on that support zone versus the bearish retracement. The great thing is there could be room for both. We'll have to see where that goes. I believe that the confirmation of the breakdown will be taking out those lows. But again, no one's ever accused me of being particularly brave when it comes to this stuff. So I can understand where they're coming from if they're, looking at it from a bearish retracement perspective. I just cannot get on board with it. Short term, a close above that 9 on Friday. That 9 is now turning. So we kind of went from, moving to the downside to flattening out, closing above, and starting to push up. At the very least, I don't think we're going to get those sell signals generated until we take that back out. That rising 9, that can turn into a support level very quickly. If you kind of think back into our last test of that 250 zone, we really were struggling, tremendously struggling. Really might never be the right word. But after finally breaking above it and that thing turned around and stopped going down, flattened out, started going up, we actually used it all the way up until the old resistance level. Now, I'm not saying that's going to happen this time, but that can happen this time. So I will be looking, if I'm looking for new bearish entries from a swing perspective, not an intraday perspective, probably going to need to see that 9 EMA taken out before I am comfortable with that. But quite honestly, I'm not so sure that this has broken down yet. And well, I'll root for people who are bearish, but I won't be on their side. But I won't be against you for whatever that's worth. And lastly, over on crude, nice bounce back after that Friday selling here. Aggressively speaking, a little more upward movement. I could understand the argument going into tomorrow's candlestick. But again, it's going to come down to how do you feel about things? We are below those short-term moving averages. And that is, not as pretty. Right, it's been a lot easier on crude this last little bit. I mean, hopefully, what will happen in the next couple of days is we build this little ceiling out. We start to develop a new little ceiling here for tomorrow and maybe Wednesday, and then we break to the upside for confirmation on Thursday. I don't know that I'd want to jump into upward movement tomorrow on crude, although I do understand the argument to do so. But if we can have a couple of candlesticks just kind of hanging around this, 63 to 63.70, 63.75 or 80 range, and then break to the upside, that could be an interesting signal. Obviously, we'll see if we get that one or not, but that is what I'm looking for going into the week. If it's just going to snap right back up, and I wouldn't be surprised. I mean, this trend has been very, very strong. Then probably not playing into this retracement. But if we can get a little bit of a consolidation, develop another one or at least one more day of intraday resistance for a little bit of a break, then maybe we can talk. So we'll see where we are tomorrow over in crude. So ladies and gentlemen, that is the market recap for today. So I mean, really, it's earnings. We've got the Fed meeting coming up this week as well. That'll be something to keep an eye on, of course. We'll see that one on Wednesday, but really it is just the barrage of earnings that we're going to be getting all week long. It starts tonight with Google. I think there was almost 30 S&P companies reporting. I think Gino said there was 1,000 or around 1,000 just companies reporting earnings this week. There's lots, and that's probably going to be the big storyline. So, of course, check up on those earnings calendars. Make sure you've got your game plan for any trades that you're doing. If they've got their earnings coming up, know how you're going to deal with it, whatever that might mean to you. Thank you. You're very welcome, Marie, and thank you guys so much for joining me. It's always more fun to hang out with you guys than to do this on my own. So thanks for hanging out, going through the routine with me here this little bit of a springy Monday. It's a little rainy and windy out in Utah today, so it's not quite summer yet. So ladies and gentlemen, we do have our onboarding webinar tonight. I'll be doing that at 8:30 Eastern over on Tackle Trading. So if any of our new team members are here today or catching the recording a little bit later, certainly be happy to see you over there. That is tonight at 8:30 p.m. Eastern. For the rest of you guys, as always, it's great to have you guys hanging out with me while I do this. So thank you so much for your time. If you're new around here, do be sure to subscribe to the channel and hit that notification bell. Also, join us over on Twitter at Tackle Trading. You can find me at Frank Martin 23. And last piece of advice, if you haven't had a chance to go through the stock report this week, certainly would encourage you to do so. Matt did a very, very nice job going into very good detail on kind of how we put together those entries, those stop losses for the things and the scouting report, just so you have a better idea of kind of how to use them. So I know many of you guys probably have already checked out those reports, probably already taking advantage of them this week. A lot of them were ready to go this morning. But if you haven't had a chance to just yet, would certainly encourage you to do so. It'd be a great learning opportunity, and probably still some good trade setups in there. So thank you guys so much. You guys get out of here. You guys have a fantastic Monday afternoon. I'll look forward to seeing you same time channel here on tomorrow, Tuesday. Yeah, I'm not back from the draft weekend yet. You would think but no, I don't have too many weekends where I'm really lazy. So when I'm this lazy, I really have to kind of get back into the swing of things. Maybe tomorrow I'll be back. So, all right, thanks guys. Get out of here. Have a great afternoon, and I'll see you tomorrow. Bye, everybody.